Welcome to Buy, Hold, Sell. My name's Matthew Kidman, and today we've got an eclectic bunch of stocks to talk about. And joining us are Steve Johnson from Forager Funds. Welcome, Steve. And Tim Carleton from Auscap. Welcome, Tim.
Thanks, Matt.
First stock today has been under a lot of pressure, Steve. It's got tangled up in the oil energy story, is Origin Energy. Buy, hold or sell?
Hold. I think they've got lots of problems, and the problems are real. That has been reflected in the share price to a large extent. So I don't have a strong view either way.
Has it fallen far enough, Tim?
We'd probably still have it on a sell. I think their energy exploration and production division is going to be under pressure unless oil bounces some considerable way.
Okay, going to the other end of the oil production is Caltex.
Sure.
Saw a big sell down from its major shareholder recently. A lot of stock out there. Buy, hold or sell?
Hold for us. They've got some good operating momentum, but a $4 to $5 billion stake is a lot for the market to digest, and that'll take some time.
Steve?
Very different business these days from what it was even 5 years ago. It's much more of a retail business than it was. I think there's quite a decent opportunity here. We don't own the stock, but for the long-term investor that's prepared to wait through this period, I think it's probably a long-term buy.
Long-term buy. Let's switch over to retail. It's a fair jump, and I know you like your shopping. Harvey Norman.
Like my shopping, I don't like retail. Sell.
Sell?
I think the penny has dropped in Australia in terms of commodity prices and the slowdown in China. I don't think people have yet thought enough about the flow-on effects of higher unemployment and what that's going to mean for consumer spending.
Right, and Harvey Norman has been go Harvey, go Harvey.
Sure.
The stock price has done well. Tim?
It's a hold for us. I mean, they've still got some tailwinds around products exposed to the building and construction cycle, which has been going very well, and I think will continue to do so, but it's trading at fair value.
And let's go to its little colleague or brother, JBH HiFi.
Yeah, for us it's a buy. It's a great company. It's not expensive. People are very focused on poor consumer sentiment, rising unemployment, but the flip side of that is rising equity prices, rising house prices, lower interest rates, and ultimately our unemployment rate hasn't risen as dramatically as we might have expected.
Steve, you're not such a bull on consumer. Can JB HiFi go higher?
I like this business a lot. I think it's very, very well run, but because of my concerns about the discretionary spending side of things, I'd say hold.
Okay. Now we'll switch to entertainment, and a bit of an old world entertainment these days. Free-to-air television, Nine Entertainment. Tim?
Yeah, for us it's a hold. It's not an expensive company. It's probably one to put on the watch list. They've got a competitive threat in the form of new entrants in that online television space. So it's probably too early to have a buy on the stock, but it's not expensive. It produces a lot of cash.
Not a lot of growth, Steve. Is it worthwhile buying and holding?
Not a lot of growth. I think there are threats from outside the industry, and I think there are threats from a reinvigorated 10 within the industry as well. 7 and 9 have basically had the commercial market to themselves for the past few years, and I do think you will see that cycle turn. But again, there's a lot of free cash flow there, and I think that probably justifies a hold at these prices.
There you go. 5 stocks. We've got a buy, we've got a hold, and we've got a sell.